Good morning or good afternoon, everyone, and welcome to this week's Captive Review Virtual Symposium. I'm Lauren Ingram. I'm the editor of Captive Review. We're running a series of these, and the topic for today is employee benefits. So once again, welcome, and I hope you enjoy the content we're putting out today. In the last year, we've seen massive growth in the employee benefits sector, and it's only gotten more interest and more interesting since COVID-19 became a global issue. Today, we've got Generali Employee Benefits and Spring Consulting Group sponsoring the symposium, and we're in partnership with the Vermont Captive Insurance Association, or VCIA. So first, just a little housekeeping. As our virtual symposiums are interactive, you have the opportunity to vote in some polls and submit questions to our panelists. To do this, you just need to go to the website slido.com and enter the code CaptiveVirtual when prompted. There will be some polls there that you can vote in on employee benefits, and there will also be a Q&A at the end of each segment, so you can submit questions to the panelists. If you go to the handouts tab on the webinar, you'll also find some information from Generali and Spring Consulting Group that you can download. Now, to quickly go through our agenda for today, we'll have a quick welcome from myself and my co-host, Richard Smith from VCIA. We're going to have a fireside chat with a captive owner and a captive manager on implementing and maximizing the value of employee benefits. We'll have a quick break, and then we'll have a panel discussion on the impact of COVID-19 on business interruption and employee benefits. And there'll also be a Q&A at the end of both the fireside chat and the panel, so make sure you submit those questions at slido.com. Now, I'm very pleased to introduce Richard Smith to have a little bit of a chat about VCIA. Welcome.
Thank you, Lauren, and thank you very much to everybody. I'm Rich Smith. I'm president of the Vermont Captive Insurance Association, and it's my pleasure to join Captive Review for today's virtual symposium. VCIA is the largest captive insurance association in the world with over 450 member organizations. And come this August, we too will be going virtual. We're hosting our 2020 annual conference online on a platform that combines the virtual world with the high educational, networking, and marketing opportunities the captive industry comes to expect. So I look forward to seeing you all again in August. I'm looking forward to moderating the second panel. For now, I'll turn it back to Lauren and look forward to the first panel going forward. Thank you, Lauren.
Thanks so much, Rich. So now we've got our fireside chat, which looks to be really fantastic. We've got a captive owner, Dana Fang, who's the Director of Captive Programs at Cummings. We have a captive manager, Lara Ribeiro Assad from Generali Employee Benefits. So welcome to both Dana and Lara, who are going to have a really interesting chat on implementing and maximizing the value of employee benefits. Over to you, Lara.
Okay, thank you, Lauren. Hello, everyone. So I'm Lara, and I'm from Generali Employee Benefits. I have joined JEB some 6 years ago, and since 2017, I'm the Captive Client Service Manager for the EMEA region. My role is mainly to help clients with the implementation and the daily management of the captive programs with JEB. It's a pleasure for me to be here today, especially with Dania, who's very experienced on the captive business. So I'm looking forward to this chat. Dania, over to you.
Great. Hello, everyone. Welcome to participate in today's employee benefits session. I'm Dana Feng, work for Cummings, and we are a global power leader. Just celebrated our 100-year anniversary last year, and we have probably occupying over 60 countries with over 30,000 employees internationally outside of US. And I have been working for Cummings for the past 10 years, and this is my 10-year anniversary. So, for captive side, I have been leading the captive program and the operations, which we are domiciled in Vermont. and is single parent captive. In the past, we have been focusing on property and casualty lines, and we just started implementing international employee benefits program. So looking forward to today's conversation. Back to you, Laura.
Thank you, Dana. So I guess it's important, Dana, that maybe if we start with a bit of a background information on the program that you have today. So we all understand that captive clients are very unique, especially when we're talking about EB. And for Jeb, and actually for myself as a client manager, it's very important to understand what's really the need of a client. So I guess it's key to understand from the implementation for a long-term success. So today, as a captive owner, can you please share with us a bit what's the current structure that you have with the Cummins for the EB captive?
Yeah, definitely. Would happy to share. For Cummins, as mentioned, we have over 30,000 international employees, and for international employee benefits program, we have to cover employees and also their dependents. So it will be a pretty large program. And for Cummins perspective, we have been decided really implementing the program compulsory to cover all international programs and countries wherever we have the captive reinsurance arrangement or captive solution. So it will be a 3-year enrollment plan. That means gradually, depending on the structure and the current country relationship, because we already selected 2 fronting partners, and wherever we have the current local network, we will implement it the first year, and then gradually the 2nd year and 3rd year until all the countries, all the current programs will be enrolled into captive structure.
So indeed, it sounds like you have already quite a structure in place. And even though you're in the beginning of this implementation, it's very much structured for the long term. So thank you for sharing it with us. I see many ways of different clients starting a captive program. I believe that many companies, for example, might use a pooling program to use it as a learning curve before operating an EB captive. How has this journey been for you? Did you have a pooling program? Did you start from zero immediately into a captive program? How was it for Cummins?
Yeah, before we started captive program, we actually started the whole conversation with the internal leadership, especially HR department, long time ago. And at the start, it's really important for us to understand what current structure we have, and how many programs, how many countries, etc. So you need to have the overview picture. And when we started the initial feasibility study, we look at the structure overall, and we realized first, many of the local country program is still in country by full local commercial. Some of the programs are in multinational pooling, but not many yet. So I think that's where we started to see the potential benefits of utilizing captive structure so that we can centralize the program, and then probably can pull out all the information from all those local separate insurance program or multinational pooling program into one captive structure. That's very important for us.
And together during this process, when did you decide which lines of risk, and actually which lines of risk related to EB are included in the captive of Cummins today?
Yeah, it's also another journey. When you started the feasibility study, you kind of have to look at, normally for international employee benefits program, it will cover medical, life, disability, accidental, and some small dental or rider policies. And we look at everything, have been thinking about a different strategy initially, because life and disability normally don't require lots of local communications with employees, doesn't like a medical program. So we initially thought about whether we should really implement life or disability first. but then realized that because of our global portfolio, medical will occupy over 85% of the premium volume. So, if we only talk about life and disability, then we try to find a global partner and decide pricing and also all the potential fees for captive structure. It will not be really beneficial. So that's the first consideration, which line we will go, and at the end we decided everything will go in together. And we also look at the country structure. Initially, we have been thinking whether it makes sense to pilot some countries. Some may be easy or more acceptable by local business leaders. But then after quite some local communications with the regional HR team and even regional business leaders, then we finally decide it makes sense just do compulsory by all countries go in. And by doing this way, we will just having the large pool just by captive structure only. And then no matter big countries with large population or small countries with really like a few employees, they will all get certain benefits out of the captive structure. So at the end, just all country at the same time, within 3 years enrollment.
That's great. Thank you for that. And you mentioned the challenge with the local HR and the local business unit. And again, mentioning a bit the pooling scenario, we usually see that it's easier, or it's typically up to the local HR or maybe to the local risk manager to decide on the level of benefits or with which local insured to partner with. And you have mentioned that with Cummins, it's going to be mandatory to follow the captive program. So this decision is taken very centrally. What were the main challenges that maybe you have faced when you took this decision to say, okay, we're going to start a captive program, we're going to roll out, and it's going to be mandatory? How do you align this local needs and also the central needs?
Yeah, that's a good question. Actually, when we started communication, and even right now we are doing the whole program implementation, we see lots of different levels of challenge. I think the most important one is really how you can work with your HR team, because captive is to provide the risk financing tool and the solution for the whole structure, while HR will be the leader to decide the benefits strategy and how they want to really implement the program, or how in future they want to change the program. So it's kind of like the marriage life between HR department and the risk department. You need to really have constant dialogue, understanding each other's needs, and having frequent communication about all the questions you are facing with, and also help support all the regional team to really get better understanding. So that's the first and most important thing. Well, the other areas we have been seeing is, how to get regional and local country leaders buy-in about this concept. They have been get used to the local commercial arrangement. So not many people in the worldwide really understand the captive concept. That's why, to get their buy-in before you really want to implement the program successfully is another important layer. And then the third one I can think of is really about selecting the good global partners. With such multinational program arrangement, especially lots of in-country specific arrangement, maybe many people, if you don't have international employee benefits yet, but you understand from global property or cargo, when you implement into those countries, they will have lots of in-country challenges and the regulations and laws, etc. The same thing here for international employee benefits. And I can say it's even more complex. So to select the good global partners can work with you, support your needs, and help you really making sure all your arrangement can be implemented in those countries will be really a critical item too.
I fully agree with you. I guess that's this communication between the captive, the local HR, the local insured, the network provider. This is very important for a successful long-term program with the captive EB. And as you mentioned, EB is not so easy.
Yeah.
When you have started to think of the inclusion of EB on the captive, what kind of studies have you performed to decide, okay, does it make sense from a financial perspective or not? Did you do that? Was it something that Cummins has decided to do alone, or maybe did you have a third party involved in that?
Yes, we definitely have partner to help us on this because in captive industry, they have so many experts. Just like Spring will talk about it in next session. I think they are one of the experts in this area who can help on feasibility study as well. I think when we started the journey, as mentioned, we started quite early, and we even started with some kind of country-specific request because in some country they started to see the trend about, especially on medical side, like in the following 5 years, their projection of the medical premium increase will be double. So, you know, to local entities, this will be a big hit. So they are trying to really start evaluating what will be the other alternative solutions for them to really help them smooth out the premium increase for medical side. So that's kind of one question we received quite often before we even started the whole program. And then the other thing is we evaluated the structure, you know, comparing captive versus full local commercial and also multinational pooling. I think sometimes in certain country, those multinational pooling or even full commercial program, they will have some dividends. So to local HR or to local employee, you know, it may sound really attractive. So we have to really show the benefits about a captive because for our captive arrangement, we take the structure as break even. So that means, you know, we will remove all the unnecessary insurance cost, like some dividend is actually coming from the margins, or local insurers may have other costs that they need to really accrue in. But for captive structure is really simple. It's purely based on the claims we are going to pay, and also based on all the fees we are going to incur. Definitely, it will including, you know, we work with partners, all the local network, all the fees necessary needs to happen. But after that, we are not really making any profit out of the program. So that's the key message we passed on to our HR team to really making sure everyone understands if its captive structure is not supposed to really make profit for our arrangement.
Mm-hmm. So you really had to show and to prove to your local colleagues the benefits of being a part of a captive program. And I believe that for that you probably had to use a lot of data and make many analyses. So I guess that data is a big topic, and in the insurance industry it's the same. So at JEB, for example, we have been focusing so much on that. I guess recently we have received the ISAI Type 2 certificate, which is related to the collection of data and the processing of data. I guess aside that, we are also working very hard in providing as many reports as we can and as customized as we can, because of course, every client, every customer wants to see their numbers their own way. So do you think that even with all this effort we are putting in on data and analysis and technology, do you think that the employee benefits industry, and more particularly about captives, do you think that captives are taking the full advantage of all these digital tools and all these advancements in technology?
Yes, definitely. I think both captive industry and the employee benefits industry are kind of pioneers for utilizing data. One really key initiative why we started the captive program is really about to centralize the program so that we can collect the data from all global countries. And you can now imagine when we do some individual country study, we ask for the specific claim data from their local insurer. Well, the answer we got is no, we cannot share this with you. You know, it's our program, our thing, and if we want to really make a good projection for future, we need to understand what data we have, what claims we have, and how we can manage the trend, which will reflect back to the program, help smooth out the cost and managing the premium increase, the curve. So that's why, you know, it's important for us to really utilize the captive structure, gather the data, and that's where I believe Generali as one of the partner will definitely can help a lot here.
Yes, I guess that this is what you're mentioning is that we see with many clients over, I'd say over the 6-7 years, we have a lot of demand on especially medical data. It's the most complex plan to manage together with disability, but the medical data, I guess it's key and it's being requested a lot. So is this medical data that you receive or that you will be receiving, because of course the more years you have to analyze, the better it is. Do you think that this is the kind of tool and this is what you're using for the management of the EB captive? Is this what you expect?
Yes, I think definitely we understand both of our fronting partners can gather good data and then share reports with us, so that, you know, whenever we need it, we will have, in addition to the regular report, annual report we will receive, if we need any specific country for specific medical trend, or we want to identify the top risks by certain arrangement, I think everything can become available for us. So that's the really important thing for HR even to manage their program. And then the other example I can give is when we go to UK, we understand in local country and even in the whole Europe, mind health or mental health is really important, one of the top risk. And also many large organizations in those countries need to take care of their employees, especially lots of leadership role. You know, when they are leaders, they are facing a bit more challenge and work pressure, all those things. So how to really keep all the employees and leaders in their good mind health will be really important. So this is one of our key initiatives from HR perspective, which we think, you know, by partnering with Generali and you know, local network, I think we can really make a good arrangement and support our HR's initiative.
Yes, that's exactly what we have been focusing on. I guess that we have managed to gather a lot of medical data, understand that data, translate that to our clients, and then the next step is what can we be doing locally to support you in implementing some measures to mitigate the cost on the medical. So I guess that this is the next step within the health and well-being projects that we see. So we have been focusing a lot and working hard in this sense. But I'm more specialized in European captives. I'm a bit curious to know what is the US trend now related to this health and well-being and how to use it not only to mitigate costs, but also how do employees see that? Because this is, of course, an attractive point when you want to keep your talents within the company.
Yes, this is actually a good question, and we can talk a lot more about a US specific arrangement, maybe not within just an hour. Well, we definitely are US based or headquartered large corporate here, and we have large population in the US, probably over 25,000 employees here. However, currently our employee benefits arrangement here is self-insurance arrangement. But from when we have been discussing the strategy moving forward, we understand the first currently, I think we definitely have a good and strong programs already implemented, especially, in the US, lots of wellness programs you can really consider and make it happen. So as the US employees, I definitely receive lots of good benefits from the strong wellness program support. We can see this is how important it can be linked to support employees' health and also help drive down the cost for the overall medical and the other stuff. So I think overall, our intention is, from HR perspective, is really to see wherever possible, we will try to implement similar wellness programs globally. And that's where we can utilize international employee benefits captive structure to make it happen. And then on the other side, definitely corporates can think about utilizing captive to really implement for US employee benefits. The only thing for us, the reason we didn't really proceed right now is because of the DOL, Department of Labor's approval procedure, which can be really long and has to prepare lots of stuff beforehand. So it doesn't mean in future we will not pursue this route. It just, temporarily our thought is to implement international employee benefits program first, and then in future, once we feel we are ready, we will consider the other things, especially if DOL approval procedure can be really largely shortened or speed up. I think that would be a good benefits to consider that.
Okay, perfect. And is it your plan also to maybe align the benefit levels within different countries through the use of the captive and this communication that you have today with the local HR and the risk managers?
Yes, I think that's relating to our future strategy. After 3-year enrollment, then we really want to utilize the captive to capture all the market trend. No matter we have a big presence or a small presence, it's important to understand what's going on in the local market, gather the data of our own data, and then evaluate our own program, see how we can really make strategic changes for the program. So that's the important thing for future strategy. And then at the same time, to roll out a wellness strategy with fronting partners support, definitely generally has been really good partner to help us develop a certain strategy. And we have been discussing at the same time, how we can really make certain things happen. Some wellness program is outside of the captive structure, but I think it's really important and critical to help drive down the claims and the claim trend. So in the long run, I think all these things will link together, the data, the pricing, and the trend, etc. And everything will contribute to help the large corporate to manage the pricing, about the medical premium and claims or even the cost that we need to spend.
And this is all related to underwriting as well. So of course that you analyze the trends and then you need to price everything accordingly. I know we don't have too much time left, but I wanted to maybe make you a question related to underwriting of your program. What do you expect from an insurer, from a global provider? And do you do this underwriting yourself, or do you use also a support maybe from a third party for that? How is the management of the underwriting itself?
Yes, we have a global partner. I think they are really have been quite helpful. They have been in the industry for over 20 years and they know how international arrangement has been happening and what's the market trend, etc. So they help us review the program and also look at the pricing, give some support on the underwriting from underwriting perspective. I think to find a good partner who can understand your program, help you explain the structure internally, especially help answer some really complex questions from local countries, that will be really important because the timely support that you can give from captive to HR team will help make the program successful.
True. Thank you for that. Dana, I guess that's indeed, we don't have too much time. I guess we could keep on talking about captives and EB and implementation and how we could save some cut costs on especially on the medical side, because I guess it's the most complex to manage. And I'm aware that we're going to have the next session fully dedicated to COVID-19. But I guess it's important to mention the moment that we are all living now, which is very particular, of course. In the moment of pandemics, we're all at home, and we have all turned our focus to these pandemics and understanding this pandemic. So from a network perspective, we have tried our best to contact our locals, understand what could be the impacts, understand what are the possible exclusions. And I'm curious to hear from you, how do you make sure that you balance this moment where you might have an increased exposure related to risk of having more claims, and at the same time, you have to ensure that all employees are taken care of? How do you balance that?
Yeah, actually, I don't want to touch this part too much, but I think just a high level debriefing of what Cummins have been doing since the beginning of the situation. People and community support is always our first priority for Cummins. And then that's the first thing when we realized, because we started implementing the program this year with lots of countries and programs already enrolled in on January 1, and sometimes in the middle of the year, especially quite large countries with large population there. And we work with Generali and the other partner to really evaluate the in-country program, and then look at the risk to see, what's the situation. And luckily we got really quick and strong support from our leadership team, and get quick approval about implementing the situation, because in some countries we understand local arrangement will exclude pandemic clause. They have the clause for exclusion. So we just evaluated the risk, and we decided to really extend the captive coverage for COVID-19. So by doing this, I believe we will help support our employees when they need it. Definitely we evaluated the risk, and we see it's not really that high from our captive perspective so far. So it just takes time to develop the situation. So I think we will summarize the situation by end of the year, and working with you generally to really see how what's the overall impact to captive structure, and how we can really consider future program.
That's great. And you can make sure that we are putting all our efforts in understanding these pandemics and what we can do to mitigate the impacts on that. So I guess that we have the results of the poll question. So thanks for everyone that replied to that. And it's quite balanced actually. So many people have implemented already EB into their captives, but many people are also looking forward into exploring it in detail. So I hope that this session has clarified some of your doubts. And I guess it's time for some questions maybe.
Yes, hi, Lauren back here. So we are going to have some questions now. We've got quite a few questions that have come in. So we've got some things here. So we've got one that says, I'm just popping it up now. What is the overall financing strategy for your captive program? Is it important for the captive to make a profit, or rather to support your local entities. So Dana, I think if you have anything to say on this, I think this would be interesting.
Yes, definitely. I think when you look at financial strategy, it's not just for captive. You need to look at, because we are single parent captive, so we need to really look at the overall benefits from the captive structure. It's not just a purely financial, it's really what will be the benefits to the parent company overall. I think that's why all the other aspects relating to data collection, the trend analysis, the cost management, everything will blend together to contribute to making final decision. From captive perspective, as I mentioned earlier, for our captive, you can pick and choose. I mean, you can definitely say you want to really make some profit after the program, but you have to really get internal communication with senior leaders and all those regional leaders so that they can buy in the concept at the same time. But from our captive perspective, we think to break even, it makes sense because we have been utilizing our captive for the other property and casualty lines. So we are not really intending to utilize captive just for making profit. That's why we decided to do break even. And I think this way it will work well for us. Definitely the first 3 years when we implementing the whole arrangement, it will go through some of the discussions about the pricing with the local HR team. You still have to go through everything, making sure they understand it. But I know in certain countries, pricing is so sensitive. So they will ask you, what's the benefit we move into captive? Even though you made a decision from corporate, but you still need to really make sure they understand it. So if you want to tell them it's break even, I think it's more easy to sell the concept.
Yes, I think that's really interesting. And we've got another question here, which I think both of you could have some really good advice on. And what is your advice for the top things for multinational companies to consider when introducing EB with a captive? So Dana, I guess if you want to start.
Yep. For us, the first thing is really communicate with senior leaders and also with HR team. You have to really partner with HR team to really start the communication and planning because they have all the data right now. Well, captive needs to really provide solution. So how you partner with each other and then work out the whole strategy, provide to senior leaders and support, I think is the kind of first critical step.
Yeah, I guess that from network perspective, the main thing for us is to understand what's the strategy of the captive. So which countries you want to start with? Is it going to be mandatory, or are we gonna have to compete on the local market with other players? So I guess it's the more information we have from a captive perspective, the easier it gets to implement it together with the client.
Yeah, when we talk about it will become a compulsory arrangement, and we communicate the arrangement with our fronting insurers partners, I think if it's well received and everyone understands our 3-year enrollment plan well clearly, definitely you can still make changes, make it flexible, move around the countries and programs implementation date. But once you lay it out clearly, I think it helps you to really communicate internally and also with your partner and seek their support.
Great. Well, I think that this has been a really interesting discussion, and I think a lot of people will have gotten a lot out of it, but unfortunately we don't have any more time left. So thank you so much, both Dana and Lara, for giving your insights. And now we're going to move on to our panel discussion, which I'm very excited about. We're going to have Richard Smith. Rich is going to come on and moderate for us. And I'm going to hand over to Rich, who's going to introduce our panelists. So thank you so much.
Thank you, Lauren. And yeah, great first panel. It's a very interesting topic, and certainly it's an understatement to say we're in unprecedented times here. And I'm excited to hear from two well-known experts in the employee benefits give their views on the impact of the pandemic on both the European and the North American marketplace. Just a quick reminder, please take part in the polling and send in your questions, because that'll be very helpful for us to summarize the session as we go forward. My panel today includes Karen Landry. Karen is the managing partner for Spring Consulting Group. She's an internationally recognized leader in captive insurance strategy, benefits, and financing. I've known Karen for many years, a great partner in the captive insurance world. And Andrea Valaki is director of the Europe, Middle East, and Africa region for Generali Employee Benefits. Andrea joined Generali Employee Benefits in 2002 after starting in the company in 1988. So great to have Andrea as well on board. And Andrea, if I could maybe start with you, with the question is, how is the European insurance landscape reacting to the COVID-19 impact?
Hello, good morning, good afternoon to everybody. I'm pretty much excited to provide a contribution during this session. As a matter of fact, you will forgive me first my Italian accent. This is something that I've not been able to get rid of after 30 years of activity in the marketplace, dealing with corporate business. But I have to say that I am proud also to be Italian, because actually Italy is the first country that has set the pace in terms of actions that government needed to undertake in order to, let's say, to prevent an excessive spread of the outbreak of COVID-19. Europe is a bunch of different countries, each one of their own, with their own culture, with their own mindset, with their own values. But at the end of the day, I'm pretty convinced that Europe has been particularly cohesive and coherent in the adoption of all the measures that were necessary to ensure that the capacity of the healthcare facility were not put excessively under pressure because of the situation we are facing today. And actually, we have to say that also in Europe, we are seeing some countries that are well below the peak that they have reached already a few weeks back. The first of which is mighty Germany, of course. Mighty Germany is already starting to open some retail shops. And then you have countries like Austria, Switzerland, and actually also Luxembourg that are reacting pretty much well. The insurance landscape, the European insurance landscape, will there be an impact? Of course, there will be an impact. One of them is, for instance, that major European insurance companies are, of course, investing in bonds, are investing in equities, and so there will be certainly some impairments and write-downs that will not put under pressure on the balance sheet of especially the major European insurers. What we are observing these days is predominantly from the insurance environment, actions that are reflecting sustainability values. For instance, our company has decided to fund 200 million, the equivalent of 200 million euro, in order to fight against COVID-19. And similar actions have been undertaken, of course, by our peers. In terms of experience, will COVID-19 generate a deterioration of the claims ratio, the loss ratio of major European insurers? It is too early to determine it, simply because of the fact, let's think, for instance, to the healthcare business, medical expenses business. We all know that the national healthcare system are taking over all the expenses related to recoveries or intervention relative to this disease. And as a matter of fact, we have, for instance, a country like Germany that has accepted also to take over the expenses of foreign citizens coming from France and Italy that needed to be, let's say, accepted in hospital in Germany because simply because how do you say it in English? Because of intensive care units were not available in the country of origin. So there are different sort of actions that have been undertaken by the insurance environment. It is yet to be seen whether this is going to have an impact on benefit plans in the future, but I think that this is a topic that we are going to expand on very shortly.
And Andrea, what do you think the role of a captive insurer and reinsurer to support business continuity in these times? What do you think the role should be?
Well, as a matter of fact, we all know that the captive reinsurance framework is a sophisticated framework that allows sophisticated clients to manage their own risk. I think that one important element is to be highlighted, in my view, is that, of course, captive have balance sheets, captive have a lot of cash available, especially those that are particularly well managed. And as a matter of fact, captive could become a vehicle to fund liquidity problems to those parents that are actually under stress simply because of the fact that they have no revenues. This is something that we are observing here in the European market. Some captives have been particularly, let's say, creative in facilitating and support the local entities around the world by, for instance, accepting to allow premium payment flexibility, in some cases even premium holidays. And I think that a captive in this case can become a very important tool to support the local entities in times of trouble. A captive also can in our view, can also be used, all around the world. Pandemic, it's not necessarily covered. There are many countries around the world where pandemic is still excluded. And so some captives are particularly creative in finding a way to continue to settle claims related to COVID-19, for instance, on an ex gratia basis. So basically, the captive certainly can be considered as a fantastic tool to support local entities in troubled times.
Yeah, very interesting. You mentioned liquidity, and I know the regulators here in Vermont have been very flexible in allowing the captives to, in a variety of different ways, share the surplus back to their owners, as the regulator said here, Dave Provost. It does us no good if the captive is all well and healthy and the owners go out of business too. So I'm curious, have you seen that kind of flexibility with European regulators, in terms of captives?
Regulators are thinking about it, but it is true that if a captive is well managed and has the disposal of important amount of cash available, which is the case for some captives here in Europe, very likely some flexibility could be expected in a form of, I don't know, an option could be short-term loans to the parent at interest rates. This is a possible option, but of course it needs to be compliant with the regulatory requirements.
Absolutely, absolutely. And Andrea, which industries are the most affected going forward, and what consequences would this bring when it comes to employee benefit plans that are in place?
This is a very good question. Actually, it varies from industry to industry because, as a matter of fact, we all know that some industries are actually benefiting from this situation. I have the privilege to be in touch with major corporations around Europe, also outside Europe. And for instance, when it comes to transportation of goods or logistics, we are seeing clients that are telling us that they have, in 2 months, they have observed a triplication of volumes of goods handled during the period. So they are going to be pretty well when it comes to operating results. Of course, industries that are operating in the food business are telling us that they are benefiting from these situations. Unfortunately, there are going to be industries that are going to be heavily affected by the situation we are facing these days. I'm thinking particularly to the airline industry. I'm thinking particularly to the non-food related retail industries. And actually, non-food related retail industries are the ones that are most in trouble, because from one day to another, they have to shut down all the shops, so there are no more revenues. What will this imply in terms of future evolution? In our view, the industry that are going to be heavily affected by the situations we are facing now, very likely we are going to observe a deterioration of the disability cover, especially pension disability cover, simply because of the fact that some employers will very likely seem to possible layoff plans, and this is generating stress. And as we all know, stress is one of the major causes of a member going into disability these days. When it comes to other covers, for instance, I'm not seeing particular problems in the accident business, because as a matter of fact, we are observing across Europe over the past 2 months actually a fantastic improvement of the experience of the accident business, because simply because of the fact that employees are bound to stay at home, they are not going out, and so they are not being exposed to risk. So it is going to be industry related, the impact of COVID-19, and but of course we as international provider, we are going to support all of our clients, irrespective from the industry they are exposed to.
Thank you. Yeah, I appreciate that answer. Obviously, a very mixed response depending on the type of captive and the type of parent organization and organizations. We heard a lot in the first panel about the importance of data, Andrea, and I know Generali is heavily involved in data collection and at different levels. I'm wondering if you can maybe tell us a little bit more, based on the pandemic, how does that change either the way you're collecting data or what you're looking for in the data?
Well, as a matter of fact, this is a very good question, because given the fact that in many countries we are seeing that the national health schemes are basically taking over all the expenses related to COVID-19, we are not yet seeing in the data that we collect all around the world specific, let's say, impacts relevant to the outbreak of this disease. Very likely they are going to come later. Okay, very likely they are going to come later, and they are going to be collected in the same way we collect millions and millions of data all around the world, especially when it comes to healthcare business. Because as a matter of fact, we are very much convinced that being the owners of the data and being ourselves in a relationship with our captive clients, we must provide the raw data to our captive clients in order to be able for them to manage properly their own risk, and to moderate and to control and to monitor the increased expenditure, especially in the healthcare area. This is very much important as a framework in a captive scenario, and this is the reason as to why we observe, predominantly in the US, but it's picking up in Europe as well, more and more captives that are willing to run their own risk also in the employee benefits space.
Absolutely. Thank you, Andre. And let's shift to the U.S. now and bring Karen in. Karen, what are the main concerns for captives in the U.S. right now? What are the key drivers for change that you see?
Sure. Well, in the U.S., we've been, significantly impacted. The landscape's been evolving. Really, the economic markets are declining. There's been a lot of layoffs, an increase in unemployment from really full employment to, depending on the marketplace, 15, 20, 25% unemployment. And as a result, in order to stabilize the economy, what's happened is there's been a myriad of legislation enacted, Families First, Coronavirus Response Act, the CARES Act. Some of these change the underlying, in particular, benefits landscape, adding on additional benefits like paid sick leave and other coverages. Some provided financial relief for small businesses and the like. And in addition, we have states coming in and looking at some of the things going on, and they're changing their legislation as well. For example, healthcare is and health insurance is local, and so in various marketplaces you have the impact of the federal changes as well as state changes requiring health plans to broaden their coverage, provide no deductibles or covering COVID tests and so forth, really creating some additional expenses that they were not planning on when they calculated their rates initially. And what that's led to is really some drivers in the marketplace. Certainly, companies, as the economy becomes more impaired, really looking, as was mentioned of Europe, needing cash flow and liquidity, needing to lower expenses and improve, their balance sheet. Having additional losses that need to be covered, as was mentioned a little bit earlier, things like COVID-19, infectious disease, really not typically covered under a business interruption policy. And then on the benefit side, higher mortality rates for life insurance, the expansion of health insurance, and an increase in fraud and abuse. And since everyone's working from home, we have an increase in cyber liability. So really, there's a lot of pressure not only on the financial situations of organizations, but also on their insurance and related programs, both on the benefits and the property and casualty side of the fence. And captives, as was said a little bit earlier, can be a fantastic tool in helping, support the need for cash flow, liquidity, lowering expenses, and improving the balance sheet, and providing coverage for uncovered losses. And so really, I think that those are some of the drivers really impacting captives as they look to support, as Dana said, the parent companies or the companies they're associated with to get through, this challenging time.
Yeah, it's very interesting. I saw an article just yesterday about California and looking about or looking to include pandemic within their employee benefit programs, and as I believe I saw, it would be over a 50% increase in the premiums necessary to cover something like this, based on at least the analysis that was done. So some pretty stark numbers. How do you think captives can react to what the government is doing in these areas, and what should they be prepared for?
Yeah, as was mentioned a little bit earlier, I think there are a number of opportunities for captives. Captives that have been managed well, as was said a little bit earlier, can offer things like premium holidays, loan backs, and the like. But I think that organizations need to take a step back in light of the new normal and take a look at their captives and make sure, at least initially, we're seeing some rate increases passed on to some of our clients as a result of COVID, that, because of declining populations, changes in their business, people working from home, that they're really optimizing their risk, that they have the appropriate structure for their program versus the commercial market, and, that they can work towards a lower cost of risk across the property and casualty and benefits side of the fence. for those lines that don't seem like a fit in the new environment, you know, things like lost portfolio transfers, you know, changing the way that, you know, that they handle various lines of business, looking at their collateral, looking at premium financing versus the cost of capital. I mean, those are all things that can help with liquidity, as well as, you know, when they go through that risk optimization, looking at things like the correlation of risk, you know, returning capital, paying dividends, looking at coverage perhaps that they didn't have. I know Dana mentioned earlier that they provided coverage for COVID. Certainly considering whether or not the captive can play a role there, or if there are other things like trade disruption coverage or political risk insurance that they need to, you know, perhaps either consider in the commercial market. So I think the captive can provide a very, you know, a very broad role. And really, when you look at some of the lines of coverage, I think it can play an even bigger role of the ones that are impacted by.
Which lines do you think will be most impacted?
So, you know, on the benefits lines, certainly in the US, health insurance, medical stop loss, you know, disability, life insurance, workers' compensation, business interruption, and auto insurance are all lines that have been significantly impacted. You know, if you look at health insurance, basically, you know, sort of a natural one as a result of the pandemic. Really, there are increased costs due to the fact that the government and legislation in different states has expanded coverage through the end of the year. As I mentioned, by waiving the cost for COVID testing, any kind of cost sharings for things like telemedicine, counseling, vaccines, in and out of network patient care, increases in drugs due to extra refills and over-the-counter medicine. And, you know, the way that the health insurers have reacted also, you know, one of the things they've had to do is relax utilization management or claims management in light of the fact that, you know, things like getting a second opinion or whatnot, people are trying to stay away, shelter in place, work through telemedicine. It's a little bit of a challenging environment. There's also increased unemployment risk leading to election risk. As probably many of you know, health insurance is an employer provided benefit. You know, employee benefits in general are, you know, are anywhere between 25 and 40% of payroll costs in the US. And so there's a potential for increased healthcare spend. Certainly, when you look at the curve of when the US might get back to normal, it varies, but many predict that the trajectory will be declining at the end of 2020 or the beginning of 2021. What that leads with the investment markets the way they are and the you know, potential underwriting losses in the lines I mentioned, it's leading carriers to you know, to increase their loss projections on lines of coverage like health insurance, and therefore, you know, but the captives do have the potential to save off of some of those increases by looking at their rates in the long run. You know, certainly severe COVID cases can increase costs by 0.5% to a little over 2%. And if you have medical stop loss at a low attachment point, like 110%, you might be looking at a 6 to 13% increase on your medical stop loss coverage. And captives can write medical stop loss coverage in a you know, relatively easily. It's not subject to the DOL. As Dana mentioned earlier, there's a little bit more process around certain lines subject to Department of Labor approval, but there are a lot of benefit lines that you can do without that. So
yeah, go ahead, please.
Oh, I was just going to talk about, perhaps some of the other benefit lines. For example, some of the regulations that have been implemented really affect leaves, and paid sick time, as an example, has increased by 2 weeks. That's a significant cost for employers. And because of all the increasing layoffs, terminations, and furloughs leading to higher renewal premiums, certainly, while some smaller employers may be eligible for assistance, we're seeing disability costs are projected to increase. And certainly the Integrated Disability Institute projects costs will go up between 20 and 60% for short-term disability. And, likewise, long-term disability will increase. On the life insurance side of the fence, we're actually seeing carriers looking at groups that might have some older ages. Some of the US employers have a retiree life coverage, and we're seeing carriers for now shying away from underwriting those groups unless they have them as an existing program, because they're seeing higher mortality, with mortality increasing 10 to 20% depending on the underlying group. So, certainly that's what we're seeing from the benefit side of the fence. When we look at some of the other lines like workers' comp, it's not set up really for working remotely in the US, and normally it's audited based on payroll, and so it's a little bit of a challenge for the commercial market to estimate what the premiums might be as a result of these payroll audits, with the premiums declining because there are less people to cover. And at the same time, you have claim systems impacts that will make ultimate loss costs more uncertain, because there's medical treatment delays, court dates are delayed because of closings, and claims adjusters can't really work directly with claimants to settle cases. So, and workers' comp has a particular issue. Part of what's covered is the employer's liability component, and really, I think that what's happened is that employees that normally can't sue under workers' comp are saying there's extenuating circumstances, and are suing employers because they put their employees at significant risk. And there's a case, pending for the estate of someone that worked at Walmart that got COVID, and basically it's resulted in a lot of other inquiries, heightened level of covering these COVID exposures under workers' compensation, even though you have to prove that someone got this coverage at work. And so things like that we've all been doing, like social distancing, warning employees if a colleague has been exposed, and following certain guidelines set out by regulatory bodies, isolating sick people. If an employer isn't proactively doing those sorts of things, there are a number of pending cases, and states are looking to include this in workers' comp, even though it might not be. One would wonder if it's really covered in the first place. And then on to business interruption. Like other parts of the world, infectious diseases are normally excluded. However, states are looking to broaden the coverage. Was just mentioned that health insurance is covering some bits of COVID. Well, a number of states are looking at how will they expand the coverage. And so there are a handful of 8 or so states that are looking at modifications to business interruption policies, where the carriers may have thought that they had no exposure initially because of the exclusion for infectious disease. So, you know, I think the ability, having a captive to fund some of these exposures, these lines, either now or in the future, is something that, you know, could come into play. And then lastly, the other line that I think is impacted is the auto coverage. Really, there's been a significant decrease, like the rest of the world, everyone's sheltering in place, therefore no one's driving. And the regulators are really, you know, working with the carriers to return monies to people who've, in a sense, overpaid as a result of the pandemic. Although, you know, there's still a lot of commercial vehicles, as was mentioned earlier. Transportation is something that's, you know, perhaps benefited by this. So if you fund auto coverage through your captive, you know, whether or not you're going to have to return some premiums, it could result in a material decrease. You know, that might be one area that you need to consider. Whether or not you're going to be able to get appropriate medical treatment to people who've been injured in auto accidents because of the concern people have going into hospitals in the US, whether or not you're going to be able to get something repaired, you know, at a timely basis is also unknown, increasing your claims cost. And it could definitely increase fronting fees, the retained premiums, and your loss ratio. And lastly, medical professional liability, which is really the liability that healthcare professionals assume. There's court closings, changes in policies, you know, delay in delivering healthcare. And some of the healthcare organizations we work with are beginning to see an increase in certainly queries and, you know, around the liability space with, you know, people that have been treated in their facility feeling like things weren't done in a timely manner and exacerbated the situation. So, you know, really giving them excess liability that they wouldn't have anticipated previously. So I know that was a long-winded answer. But...
Well, no, there are lots of, yeah, I mean, there are lots of lines and lots of the impacts, as with Andrea said, just depending on the type of organizations. I know we have a number of questions already lined up, and that I want to ask Lauren to come back in and bring those questions up. I do want our panelists to think of, like, thinking ahead, what do you think 2021 will look like? What will the market look like? What will the impact look like? But let's maybe start with Lauren and get some of those questions up.
Yeah, so we've got a couple of questions here which look really interesting. So the first one we've got is, could introducing a temporary COVID-19 coverage for captive clients asking it have an impact in a long term for the reinsurance company? So just wanted to see if maybe if Karen, if you wanted to start, do you have any thoughts on that?
Well, yeah, I think that if a temporary COVID-19 coverage is introduced, I guess it would depend on what form would it take. If it's health insurance, I think the employer, by virtue of their health plan, having to broaden coverage, you know, if they had medical stop loss on their captive, it would definitely impact that line of coverage. But I think it would, as we all know, captives are a really valuable tool. I think it would reinforce the value of the captive to the organization to be able to provide that coverage. And if it's a well-capitalized vehicle, it might be another way for the organization to, help with the need for cash flow and liquidity, and minimize the corporate expenses by using the captive by providing temporary coverage, as an example. So I think it would be a positive for the well-run and capitalized captive.
Yeah.
And so sorry, Andrea, do you want to weigh in?
Yeah, I wanted to run a comment here because I think it's interesting. As a matter of fact, when it comes to Europe, when dealing with international, multinational business, we as a company have adopted a certain, let's say, framework. As a matter of fact, when in a given market there is in place, because of market practice, a general exclusion of pandemics, we tend to maintain it, but we are facilitating our captive clients to provide coverage if they're really asking for it, by facilitating ex gratia payment. Because we believe that if pandemic is to be excluded, or waived, it must be a market practice. It must not be specifically asked and granted only for one individual company. It must be a market practice. And as a matter of fact, we are seeing, for instance, the market of Singapore that is actually thinking these days to waive the exclusion that has always become a market practice, has always been a market practice. So the attitude, the approach could be slightly different. On the other hand, just to come back to one comment made by Karin, when it comes to, let's say, a strengthening of the mortality rate, I think that we're not going to observe this in Europe, simply because of the fact that covering retirees is a specificity of a few markets, including the US, whilst, for instance, in Europe, normally covers is at normal retirement age. But on the other hand, I wanted only to make one important comment. I think that insurance market in Europe are being particularly creative in introducing new benefits. Okay, new benefits that actually can be funded through a captive company. For instance, it is not a mystery that Italy has been the first insurance market to have created in a few days a specific cover for COVID-19 that is providing an indemnity section plus an assistance section with a daily allowance in case of hospitalization and an indemnity being payable to a member in case of hospitalization in an intensive care unit. So insurance market can be pretty much creative in providing solution that can accommodate some concerns of international multinational clients. I think that this was important to highlight.
Thank you so much. So unfortunately, we've run out of time for any more questions, even though we do have a couple here. So I just want to thank everyone on the panel. And we have had some really great questions come in, and I want to say very much thank you to Lara, to Dania, to Andrea, to Karen, and to Rich for coming on today. I want to just quickly, before everyone goes, remind everyone we've got the Captive European Summit virtual edition that's launching tomorrow. We're hosting that on Wednesday, the 17th of June, which is a new event for any captive owners or prospective captive owners. So please get in touch if you are interested in that. And we also have our next virtual symposium, which is happening on Thursday, and that's going to be on COVID-19 and captives. And that's going to be focusing on parametric insurance and risk pooling, as well as pandemics. So a little bit of a different take on what we've covered today in terms of COVID-19. So thank you very much for attending today, and I hope that you'll all tune in to the next one.
Thank you.
Thank you.
Thank you very much.
Thank you, everybody. Thank you very much.